Hello, everybody, and welcome to the next episode of the Fireside Trader. JD here. We got a really great show for you this week. Lots of things to dive into, and it's the holidays. We're roaring towards the end of 2025, which means we're looking forward to 2026. And in this episode of the Fireside Trader, I'm going to be bringing you my 2026 Trade of the Year, so make sure you stick around for that. In this week's episode of the Fireside Trader, we're going to be talking about the week that was. We have a textbook arbitrage trade to discuss with you today. I'm really excited about this. I'm going to share with you Two Sigma trading, an introduction to Two Sigma trading, something near and dear to my heart, and really forms the basis for everything I do from a trading perspective, as well as an investing perspective. Then, of course, we've got 5 questions with my good friend Louis Navellier. Really great segment that's fun to do with my good friend Louis Navellier, and this week will be no different. Then, as I said, I'm going to bring you my 2026 Trade of the Year, and as always, we'll finish this week's episode of the Fireside Trader with a look forward at the week ahead, a holiday-shortened week, granted, but nonetheless an important week as we really look for Santa to ride his sleigh into our portfolios, bringing us to a strong finish for what's been a really good year for 2025. Let's start with the week in review. Really interesting week for Fireside Trader. We had a lot of different things happening this week that impacted my trading, and some for the good and some not so good. So we'll discuss it all. First, the week started on Monday with what I would call a textbook arbitrage trade. What is a textbook arbitrage trade? What the heck is an arbitrage trade to begin with? Well, remember, the premise of the Fireside Trader is to help you all build $1 million portfolio. And we're doing that by targeting, if we can, a 10% intraday return each and every day we're in the markets. That's an average, mind you, but it's something that if we can target 10%, depending on what our allocation is to each and every trade, you can see how quickly we can build a portfolio here in the Fireside Trader. And ultimately, over time, the goal and the objective is to build $1 million portfolio. So the way we hit our targeted return each and every trading day is to look for arbitrage opportunities that we can exploit. And an arbitrage opportunity is simply taking expectations versus reality. And to the extent those two things are different, then we can place a trade expecting reality to come in line with expectations. And so the way this manifests itself for me is in a service I call the opening bell arbitrage, utilizing a proprietary market scorecard that helps me, again, identify arbitrage opportunities, starting with a forecast that I put together 30 minutes before the trading day. So Monday was fascinating because the start of the week, the last full week of trading, by the way, before the holiday season and lower volumes and potentially manipulation, but manipulation for the good if Santa does his thing. So on Monday, I fully came into the market after a Friday prior where stocks dropped over 100 basis points on that Friday before last Monday. And as one would expect, the algorithms and the computers are so one-dimensional. The narrative heading into Monday was, oh, we were oversold on Friday, so we're going to buy, right? It was going to be an up day in the market. Well, I came in open-minded. I'm not influenced by what futures are telling me. In fact, futures often provide the arbitrage that I'm looking for each and every trading day. And so when the futures were telling me stocks were going to open higher by 50 basis points, I really wasn't surprised. But I had to do my work. And the work was turning the dials on my market scorecard. I use 8 specific metrics that help me come up with my forecast of expectations for that trading day. And when I started my work, I fully expected the market scorecard to be right in line with what the futures were telling me. It was going to be an up day. I didn't know if it was going to be 50 basis points, but I knew it was going to be an up day. So to my surprise, after turning all of the dials on the market scorecard, the market forecast for the day was for a market to be flat. Wow. As I said, futures were pointing to a 50 basis point upswing, and my market forecast, my market scorecard was pointing to a flat market. There's your arbitrage. There's your trade. I deployed a very easy 0-day option, put debit spread, deployed it right at the open, and it didn't take long, really within the first 30 minutes, that 50 basis points of froth in the futures market evaporated quickly. And as always, I'll put in a good to cancel order. This time, because there was such a big arbitrage, I put in a fairly healthy, close to 100% return on the trade as my GTC target. And within an hour of trading, that order or that GTC was filled, and we closed our trade that day for a 91% return. It really, to me, was just a textbook case of arbitrage, exploiting arbitrage, and again, deploying. Now, in my trading account that I'm managing for a friend of mine, we're deploying $1,000 per trade into these daily arbitrage trades. So putting in a 91% return really was a fantastic way to start the day. We also had a very small fractional winner the next day, but then the ugly part of manipulation in the market happened on Wednesday when the market opened. Everything was looking great. We had triangulated an arbitrage opportunity, this time on the long side, without going into the details. But somebody in the press decided to do banking investigation into Oracle's financings of data centers in the state of Michigan and questioned whether or not the financial engineering that was taking place to finance these data centers with, by the way, hundreds of millions of dollars at stake, if not billions of dollars. The market immediately, the algorithms, I should say, took that one-dimensional investigation of Oracle's finances and said the AI trade was dead. And the selling that ensued thereafter was a tidal wave, really irrational, really inefficient. Now, take a step back, and you recognize that all of that selling created an opportunity for what took place on Thursday and Friday, and that is true, but really it whipsawed me into a losing trade. So net this week, we basically broke even. We had just a wonderful textbook arbitrage trade on Monday. We got sideswiped by the manipulation on Wednesday, and then the market roared higher on Thursday and Friday. Unfortunately, the market scorecard really targeted very well expectations and forecast for Thursday and Friday, but the market did not provide an arbitrage opportunity, so we weren't able to pad our portfolio with profits on Thursday and Friday. Fueling the gains on Thursday and Friday was a CPI report Thursday morning that was really very bullish, and to me ushered in what I view as the story of 2026, which is deflation. It also brought Santa out a day or two early, and so we've got the Santa Claus rally, a nice move higher of 75 basis points on Thursday, and it looks like another 75 basis points here on Friday. Now, I want to turn my attention to a little bit of a primer on something I call 2 Sigma trading. And to do that, I'm going to share my screen and start a slideshow with you and introduce you to the concepts of what I call 2 Sigma trading that actually started in this very humble building in Germany. A guy by the name of Carl Friedrich Gauss, really over 200 years ago, created what is, again, the foundation for 2 Sigma trading. And basically, if you haven't heard of him, no surprise, most haven't, unless you're a statistician. But he really did change the game for how we understand statistics today. And his work led to what was known and what is known as the 3 Sigma rule. Now, before anyone panics, I'm not going to give you all a math test, and you don't have to know advanced stats to make it work, but I did want to give you some of the basics and the history because it shows just how powerful 2 Sigma trading can be. The 3 Sigma rule simply dictates that in normal circumstances, all outcomes happen within a set range. You may be familiar with this 3 Sigma rule because a picture tells 1,000 words. Now, I'm sure seen this chart before. It is a standard bell curve, and the bell curve defines pretty much all outcomes of any kind of event. It's an ironclad rule that applies to everything from our height to our blood pressure, even to our IQ scores. And for our purposes, there's a much more important application. Because over the years, brilliant researchers at schools like MIT, Harvard, even the hundreds of PhDs at the Federal Reserve utilize this bell curve principle, and the exact same distribution that we see on the bell curve applies also to price movements within the stock market. So let me show you what this means by taking the same bell curve and applying it to the stock market by flipping the bell curve on its side. And you can see all outcomes in stock trading happen within these bounds of 3 Sigma. And for my purposes, I'm really only looking at, well, this chart showing you all of the different Sigma lines. And right in the middle, by the way, is something we call the mean price of a stock. And for my purposes, like I said, I only want to focus on one line, and that's the 2 Sigma line there. And the reason I do that is because it is the single most predictive force in the entire market. And when a stock trades below 2 standard deviations below the mean, which is what 2 Sigma is talking about, then we have an outcome. 97.8% of all stock price movement happens above this 2 Sigma line, right? So think about it in poker terms. If a stock is trading 2 or below 2 standard deviations below the mean, the probabilities tell us that we are going to get a rebound back into where all action typically occurs. And because of that fact, then we also can trade and know when to buy a particular stock. So when we hit that 2 Sigma line, there's really only a 2.2% chance of it moving lower from there. It doesn't mean, again, this isn't a guarantee by any stretch. This is just a framework that I use to help me be a better trader or a better investor. And I think it's really cool. I think it's the foundation of everything that I do here from a trading perspective, beyond looking for opening bell arbitrage opportunities using my daily market scorecard. From an investing standpoint, 2 Sigma is extremely powerful. It's a powerful way to build a portfolio. It's a powerful way to trade. It's a powerful way to shorten your time horizon, right? Your holding period can be a lot less because you know that this 97.8% probability over time, a stock is going to move back into that range of bell curve outcomes that Carl Friedrich Gauss identified some 200 years ago. So if you think about it, it's really something that should blow your mind. And now I'm going to share with you my dashboard tool. This is actually a position on a stock that we entered Two Sigma trading wise. You can see here yesterday, we've got the green diamond. That's my green light that tells me a stock is trading below 2 standard deviations below the mean and is a stock that I can comfortably buy. Now, it doesn't always happen like this, but it really is stunning to see we entered the trade an hour before the close yesterday, and here today you see the stock bounce more than 8%. And if you are interested in Two Sigma trading, you should really become familiar with my dashboard here, and I'll be sharing more of how you can do that later on. By the way, this is a good time to share or take a moment to, let's see, how do I do this? I want to stop sharing my screen. So there we go. Hey, this is YouTube, so this is a good time for you all to take a pause to make sure you super like us and subscribe to the Fireside channel. Really just getting started here, and I'm going to be bringing you lots of content later on when I offer up my bonus trade for 2026. Really my trade of the year that anybody can deploy, whether you're an amateur or a skilled trader, it doesn't really matter. But please make sure you like us, make sure you subscribe to the channel. And with that, let's get back to this week's episode of the Fireside Trader. I'm going to now turn it over to 5 questions with my good friend, Louis Navellier. Hello, everybody. JD here with 5 questions for my good friend, Louis Navellier. It is another week has gone by. It's the last full week of trading of the year, Louis, so lots to talk about. I'm really interested in your thoughts and opinions, especially starting out with breaking down what I thought was an amazing CPI report.
It was amazing. Kevin Hassard said it was amazing. He's the head of Council of Economic Advisors. I was very pleased with it. I was on Fox Business the day before saying it should be good because owner's equivalent rent has collapsed. But then the opposition appeared, and their argument is that, well, if they couldn't get the data, they just didn't put anything down. So when you look at the Bureau of Labor Statistics report, it lists all the categories, autos and furniture, things like that, and food, energy. And there were some blanks on that report for 2 months because the government was shut down. And so they're arguing it was rigged. But this is just part of the ongoing propaganda that to trash the American economy between now and the midterms. Because if the economy remains strong between now and the midterms, it obviously bodes well for President Trump and the Republican-led Congress. So we're going to have 11 more months of this.
Yeah.
Just prepare for it. And people have to decide, is the glass half empty or is it half full? I'm a half full guy because sales are the strongest in 3 years, earnings the strongest in 4 years, surprises the strongest in 4 years. But there was a major threat that came out. Bernie Sanders declared data centers bad.
Of course he did.
And even though Harvard said that's 92% of our GDP growth right now, according to Jason Furman, it must be shut down because it makes the billionaires richer.
Don't even get me started.
I don't know where Bernie is. I don't know where his lieutenant AOC is, or maybe her supreme leader AOC is on this. We do know she shut down Amazon in the Bronx, but
well, the CPI report, let's go back to that real quick because I find it so disingenuous. You're so right about the politicalization of the number is so obvious. It's actually more frontal than I can remember. And the analysis included this idea that the stats that were collected were in the back half of November. And that's when Black Friday sale. So, numbers must be distorted because everything was discounted going into the Thanksgiving weekend. And that's why inflation was low. And, you know, on the surface, I get why people listen to this stuff, but my God, I know how I feel about these PhDs. I can't see their nose in front of their face. Are we going to trust them to analyze what is a super complex data series? They can't.
That's right. That's why macroeconomics is hard and micro is easy. You can predict a town or a city, but it's hard to predict the whole economy and how it interacts and all that stuff. So it's very clear that deflation is forces are brewing. You see it in energy prices with the lowest crude oil prices in almost 5 years. You see it in everything we import from China. You can now go to Best Buy or Costco and get a 98-inch mini LED TV for $1,600. That's in TCL. Just the TVs are mini or micro LED for Samsung and soon to be LG. They're replacing OLED as the premium TVs, and TCL built the biggest micro mini LED plant on the planet. Is now going to crank out TVs to capture all their market share. And we also have the fact that the world's getting old. We have fewer households, and as the world shrinks, okay, we have deflation.
Yeah.
And the problem we have in America is a lot of states are not participating. And I can give you a classic example. Despite the low fuel prices that everybody's enjoying now, if you live in California, you're not enjoying it because the state lost another refinery, and they had to import 20% of the gasoline. Most of it comes from Korea, but now they're going to have to get some from Singapore and India. And because California has their own fuel standard, they can't take gas from Mexico or Canada or someplace else. So
Right.
it has to be specially made just for them. And when you have a boat on the ocean for 20 or 30 days, bringing all this refined product, I'm not so sure that is the environment.
Louis, we saw a lot earlier this week when the markets were selling off. You that much of what was going on was profit taking and tax loss selling. And I thought it would be good for you to maybe just spend some time explaining to folks what does that mean exactly and how does it have an impact on the markets?
Well, I've been doing some of the tax loss selling for people, and it's pretty simple. Uh, I say it in a nice way. The capital gains in our accounts are immense. And if we can use some short-term losses to offset those capital gains, we will do so. And I was doing some tax selling this morning.
Yeah, and because I knew so well that you're going to be the one that sells on a down day. You like to sell into
Yeah,
strength.
correct. We've had a nice rebound last couple of days, and so we sold some stocks I like very much just because they were up.
Sure, sure. And I thought that I was noticing earlier this week was that you had big portfolio managers really changing their mix. It's almost like going from a summer blend to a winter blend in parlance. You had junky skyrocketing because the short sellers were just locking in their profits and moving on to something else.
Yeah, we had a lot of mean reversion trading from October into November. We did that in our latest back testing, but the truth of the matter is over now, and it's everything's going back to quality, and the stocks are doing the best of the ones with positive analyst revisions. But we are going to have to fight this negative media. The CPI data was really blown out of proportion on Bloomberg, and then the press, Reuters, all basically insinuated the data was fake.
Yeah,
But
and I about that in question one. Fascinating to look at this portfolio rebalancing, if you will, because today the market is rallying, but stocks are not those stocks, right? So that tells me this phase is over, and I think we are going to drift higher next week and the week after before the year closes out. Uh,
correct.
Louis talked about the Federal Reserve Chair nomination process being akin to an episode of The Apprentice. That is referencing Donald Trump as the uh, your guy. Well, he's not firing anybody, but these guys competing for this job. It's quite an
Yeah, and he interviewed Christopher Waller the other day, and Christopher Waller was calling for up to 100 basis points in rate cuts. I'm sure President Trump would like 200 basis points, but he had wonderful things to say about Waller. So whether he picks Chris Waller, Kevin Warsh, or Kevin Hassett, doesn't matter. Owning the members of the Fed to go for lower rates. He's trying to get a bigger consensus on the Fed, and then when he does make the announcement in the new year, it'll be a big deal. I think Kevin Hassett as the lead, but we shall see.
Yeah, I think one other interview being held today, or is it this weekend? But that process going to wind down, and whoever we get it, it's going to be a game changer. And with this deflationary bomb you and I have been talking about, they have every reason to cut rates. My favorite prognostication for 2026 is the 10-year dropping to 375.
Oh, it'll be 350.
And you're even than I am there. So that's uh, super interesting. And doesn't that translate into higher stock prices?
Yeah, yeah. I mean, we have global interest rate collapse underway. It's just happening in slow motion. China's already at zero. They're going to have to devalue their currency. Japan is letting their rates go a little higher, but that's only because their new prime minister is spending money. But they're still ultra low. The 10-year frost 2% in Japan. The Bank of England just cut 5-4 vote, but no one ever gets along in the Bank of England's board, so that's not. But Britain's in recession now. Europe didn't cut; they led the world cutting. They're at 2 right now. But Mexico cut, rates are down to where the ECB is 2%, and we'll just blast one to cut, and we'll have the strongest currency along the way.
All that bodes your prediction. And next question for you, Louis, is the forecast that you have for GDP growth being greater than in 2026. Tell me why you think that.
Well, because we're growing at 3.8 to 3.5 now, and but the numbers are coming out late because of the government shutdown. But what we can see is looks like the trade numbers are going to add to GDP growth. Specifically, exports are at the highest level and second highest ever recorded with low oil prices. So most of our exports have been gold and pharmaceuticals. Remember, we wanted to onshore the pharmaceuticals. Well, he won, and now we're exporting them. The second is the deficit's the lowest in 5 years. So the trade deficit has a huge impact on our GDP calculations. So we got to add in that, okay, to the
Yep.
3.8% growth. So that pushes over 4. Then you got the tax cuts next year. Then you got the data centers where their order backlogs are up 20% quarter over quarter, and they're up 50 to 65% year over year. So that boom continues. Then it should grow and prosper. There is a job problem. The job market's sputtering. AI is cutting jobs, but it also add huge productivity gains, which will further boost GDP numbers.
Yeah, I think you're right. And it's complex. Again, it's talking about a bubble and worried about the impact on jobs. I just don't think they understand. I mean, they're big weight.
They're just losers.
I agree. There's really no other way to say it.
You can't stop progress.
Yeah, yeah. Okay, that year, and I'm sure you're putting out reports about 2026. I wanted to ask you if you give our that quote your 2026 stock of the year. Where would you go with that?
It'd be Sienna. That's CIEN.
Okay.
Make the switches, the fiber optics. Data centers now, but you can order the equipment for your home. I mean, just knows if they upgrade from 1 gig to 2 gigs, you have to upgrade all your switchers because most switches were blocked at 1 gig. You might have to upgrade some of your cables. Okay.
Yep.
And even the Wi-Fi you have, there's something called 6E. If you have devices that work on the 6E channel versus the 5G and the 2.4 gigahertz, 680 faster. I just did this with my daughter. We sped internet in New York and couldn't get the 6E channel on her Verizon router. So, but if we could, her Wi-Fi was a lot faster.
Wow.
So we got on that. But yeah, if you plug it in the wall, she's very happy with the speed and the uploads and
Yeah, you know, you hit, and you could be right. You know, people earlier you make these arguments that are way too simplistic, and they're not contemplating things like what you just stated. That we had an upgrade cycle in things like Wi-Fi or modems in a long time, and all of this uh, spear spending in AI is going to create this wake that is going to lift so many different boats. And I love the Sienna pick. Recently, you know, the last stock was down for all those nonsensical reasons, and I love it.
and yeah, it's and we have another one, UI, which is a same company or similar business.
Ubiquity.
Yeah, but you can't set the internet fast enough. Everybody's a power user now. So let's upgrade all our equipment and enjoy the speed.
Louis, I love all of your thoughts, and it's always great having conversation with you. It's the holidays. This will be the last podcast for 2026. So thank you for all that you do, and you've been a good friend to me. So I'm grateful for that friendship, and
Okay.
happy holidays, Merry Christmas to you and your family, and your animals too. Uh,
Yep, yep. Coco's 18 and nursing them. Okay. So,
yeah. All right. Thanks. Great five questions with my good friend Louis Navellier. We'll be back in 2026, and who knows what questions I'll be asking, but I'm sure Louis will have great opinions for us. This is JD for Fireside Trader. Take care, everybody. Louis, thank you so much. As always, great five questions with Louis Navellier. Very much appreciate you offering up your 2026 stock of the year in particular. Folks, this is just great content that you're only going to get at the Fireside Trader. So again, make sure you subscribe to the channel, make sure you like us, and that would be much appreciated. I do appreciate that. So with that, as I promised, let's go to my 2026 trade of the year. Like Paul Revere, I'm going to start by saying deflation is here. All right, what do I mean by that? Well, a lot of folks are really petrified for some reason of inflation, and understandably so. Inflation is very, very bad. Well, deflation is bad on an equal basis, right? It's equally bad. And I'm here to tell you that deflation is going to be the narrative of 2026. We are sitting on a deflationary bomb that I believe has already started to go off. We talked about a wonderful CPI report that a lot of people, for I think political reasons, are poo-pooing what I think is the ushering in of deflation. They're blaming the government shutdown and questioning the validity of the data. And I wouldn't take what these folks say much further than I can throw them. I disagree. I think deflation is here, and we're going to see deflation be talked about more and more as 2026 unfolds. So what's the trade? If deflation is here, well, we are going to see the 10-year Treasury drop down to 3.75%. We're hovering around 4.1% as we close out the year. We got up to last week 4.2%, and that was a screaming buy of the 10-year Treasury. The way I would trade the move down to 375, I can't tell you when this is going to happen, so we're going to use a long-dated option. We're going to enter a TLT, and let me share my screen again. So to deploy this trade, it's a very simple long-dated call option on the TLT, at the money. So if you can buy an $87.50 contract, That's what I want you to buy. I want you to go out at least till June 30th of 2026, if not to December 30th, 2026. You're going to pay a premium, obviously, on that because there's a significant time premium on that option. But the TLT is really the best vehicle to trade if your assumption is for a 10-year treasury that is going to go down to 3.75%. We may even drop to 3.5%, folks. So a simple call option at money today is going to appreciate greatly, could double in value or even more. So that is my 2026 trade of the year, the TLT call option and buying at the money with a long dated option expiration minimum June 30th, 2026, if not December 30th, 2026. So that is the trade of the year for your Fireside Trader trade of the year. All right. That pretty much wraps up everything I wanted to talk about for this week, folks. Let's take a final look at the week ahead. It is a holiday shortened week. Volumes are going to decline substantially. I think the narrative is a drift upside. It's going to be the Santa Claus rally. It's a very, very quiet economic, but we get a delayed final, a delayed first on Q3 GDP. That's going to be an important data point. The most important data point next week is going to be the GDP now from the Atlanta Federal Reserve. Is going to give us our first look at fourth quarter GDP. Now, you heard my good friend Louis Navellier talk about 5% growth in 2026. Well, let's see if he is going to be correct in that assumption by looking at the clues. And some of those clues are going to reveal themselves to us with how the fourth quarter is performing. Because I think we're looking at an acceleration into 2026. You've got strong earnings. You've got strong GDP growth. You've got fiscal and monetary tailwinds that are going to bode very, very well for traders and in the coming. So there isn't going to be a lot on. I'm not going to be doing a lot of trading. I will do some on Monday and Tuesday. But after that, we're just going to enjoy the holidays with friends and family, and I hope you all do the same. That's all I have for this week's episode of the Fireside Trader. This is JD. Thank you all for joining me. I'll be back. I'm not sure if I'm going to podcast next week. It is the holidays, so it may not be until after the new year, but we'll be back and ready to get a great start on 2026. Take care, everybody. Good luck with all of your trading, and we'll see you next time.